Welcome back. Shares of Carnival sinking today despite beating estimates for the second quarter in a row, with total bookings reaching a new all-time high for future sailings. Stock's down 11.6%. Today's loss is cutting into what has been a great year for the stock, up 70% roughly year to date. Joining us here first on CNBC is Carnival CEO Josh Weinstein. Josh, it's good to have you back on. Welcome.
Thank you. Nice to be here, Sarah.
How are your investor conversations going? Because I thought what you put out was pretty good news when it comes to the results this quarter and what you're seeing in the future for demand.
Yeah, no, I agree. It's all good news. You know, we smashed the results in the second quarter. We just got through our second quarter booking period, which was an all-time record. And the interesting thing about that is normally our all-time records and bookings happen in the first quarter. That's a traditional strong point. And the fact is, you know, we started our wave period, our peak booking period in the fourth quarter with a knockout Black Friday, and it just has not stopped. And it accelerated over the second quarter. And I'm really pleased to say over the last 3 weeks, it still hasn't stopped. So I think it's all good news.
I think one question investors have is this as good as it gets? You're finally getting the pent-up demand for people who have delayed their cruises and their travel, and we're starting to see a turn in the economy overall.
Yeah, no, I don't think this is it. I think the sky is the limit for this corporation and our portfolio of world-class brands, actually. And all we see is acceleration. And that goes not just in North America, but our European brands, which are really starting to take strength. And as a matter of fact, you know, in the second quarter, the bookings that were taken by our European brands were up double digits in both price and volume versus 2019 for the rest of this year. So the trajectory is really going one way.
I was going to ask about pricing overall and just what you're seeing as the strength of demand. How high are prices relative to where they were in 2019, and how much room to run do you have there?
Yeah, no, actually, we just finished up our quarter 7.5 points higher in per diems versus 2019. And that was off the back of the first quarter, where it was also 7.5 points higher than 2019. So from a pricing standpoint, we're making good inroads. We've got good demand for our brands, but there's obviously always room for improvement. And that's actually an opportunity that we're looking forward to taking.
Is there room for brand consolidation here? And I just wonder demographically if you're going to continue to. We had a long discussion this morning about the nest egg that boomers collectively in aggregate have in this country, or if you're going to make a big push to sort of young up the audience and prepare the brand for the decades ahead.
I think the answer is yes, actually, because of our portfolio strategy, we have got brands that are dedicated to a younger family demographic. We've also got brands like Holland America, which is actually looking for what we would call silver explorers, people who are actively looking for an amazing holiday, but they're not necessarily looking to be on the 5,500 person ship with a water slide. They're looking for a smaller ship, more intimate, catered to them. And that's why we're so excited, because our portfolio can achieve a lot in different segments of the markets.
I prefer water slide. So on the guidance, clearly you took it up because of what you're seeing on Q3, on the full year, but you're still expecting a loss, a better loss than earlier of 27 cents, now 8 to 20 cent loss. When are you going to get this company profitable, Josh?
Well, it does start in the third quarter, and we will be profitable, nicely profitable, with a long way to go. But I'll give you a good trajectory story about that profitability. So in the first quarter of this year, when you think about our EBITDA on a unit basis, we were 59% of the way back versus 2019 when you hold fuel and currency constant, just to give you a sense of operational performance. That went to 73% in the second quarter. It's going to be about 85% in the third quarter, and back to 100% in the fourth quarter. So we're making the right moves, and it's starting to show up in the results. And we were able to take $275 million to the bottom line in our forecast between March guidance and June guidance.